Commercial property is crashing. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee, because there's a few things I'd like to have a look at today. We've got this article from Commercial Real Estate, and it's discussing just, commercial property in Australia and how it's going to impact all of us. But also today, the financial reporting from JPT Group. And JPT, if you're not familiar with them, they are a large real estate investment trust here in Australia, one of the biggest, or if not the biggest, I think. And, is one of Australia's largest diversified property groups and a top 50 ASX listed company by market capitalization. GPT owns and manages a $25.3 billion portfolio of retail, office and logistics property assets across Australia. They've got a substantial investor base with more than 32,000 shareholders. So they're pretty big. And in previous episodes, I've just been discussing, for one thing, the shift in culture and how that will affect demands for commercial property. And I've been postulating and asking the viewers if you think it will start manifesting itself in the share price of some of these companies. Now, we'll look at the GPT Group share price, how they're sitting at the moment. So today, they've just released this morning, they've opened at $3.80. They're up to $3.89. If we jump back to 6 months, you can see, like everyone else, they took a hit from their February high down. They plunged down to $3, literally $3, and they're back up to $3.89. So not doing too bad. They haven't really sprung up as high as some of the others, but that's still a pretty decent drop, 50%. So, the coronavirus is hurting Australia's commercial property prices, and that's a problem for most of us. We've heard a lot about the present crisis, about what the present crisis will do to home prices, less about what it will do to commercial property prices. Well, yes, it doesn't seem to be, it's not as exciting for the media, or the average punter isn't as interested in commercial property. They don't think it affects them, but we'll see it affects all of us in one way or another. Commercial property prices include office buildings, shopping centres, hotels and warehouses. They account for around 8% of the assets of Australian super funds. So 8% of the super funds here in Australia. If their value drops, and they are falling, it will affect all of us, especially those about to retire or already retired. And we saw this morning, we looked at Westfield, owned by Scentre Group. Their shopping centres have taken a 10% hit in valuation. So we're starting to see this manifest. And we'll look at the GPD, some of their information that was released today. They've taken a hit as well to their valuation, to their property. Until the pandemic, commercial properties were widely regarded as a safe investment. They offered both reliable income streams and capital gains as population growth increased the value of scarce real estate. With the return on government bonds falling below 1%, they ought to be becoming more attractive. But offices are empty, their future uncertain, high-end shopping centres are receiving less traffic, and hotels have entire floors unused. In July, the number of mobile phones active in Sydney's central business district was down 52% on January and February. In Melbourne CBD, before the stage 4 lockdown, mobile phone traffic was down 65%. So what does that tell you? Are you noticing your internet at home is getting slower? Have you noticed that? I'm noticing it with my NBN connection here. It's usually quite good, but now more people are working from home. Which is, I've had to pay extra to upgrade it, and I'm still noticing, chugs and stutters. I miss having fibre. I really do. I really miss having fibre. We had it at West End office, and it was fantastic. Data centres are among the few commercial property bright spots. We are moving more data, along with distribution centres and regional shopping centres. We are shopping online and closer to home. Over the course of the year, the value of commercial property trusts listed on the Australian Securities Exchange has slid 29%, 32%, 34%, 48%, 52%, and 69%. Wow. Here's the share price of GPT Group. For super funds with 8% of their assets in commercial property, a decline of 25% in values knocks 2% off their assets, 54 billion across the industry as a whole. In the only other big downturn since the advent of Australia's superannuation system, the GFC, commercial property offered the fund stability while shares were volatile. Not so this time. The value of commercial property is diving along with the stock market with just as uncertain a future. Theodore Connell-Very, lecturer at the School of Property of RMIT, and Tony McGough, senior lecturer of property at RMIT. And there we go. So, you can see here that it's taken a big hit. Now let's jump over to the GPT, their property groups, and I have brought up there, this is from the ASX, their interim financial report, and let's just look at the director's summary, because this is reporting season and I wanted to go through these. We'll see how many I get through every day. But here we have it, the director's report, and we'll just go through the beginning here. The directors of GPT RE Limited, the responsible entity of General Property Trust, present their report together with the financial statements of the General Property Trust, the Trust, and its controlled entities, the Trust consolidated entities, for the half year ending 30th of June 2020. The Trust consolidated entity, together with GPT Management Holdings Limited and its controlled entities, form the stapled entity, the GPT Group, GPT or the Group. So, and we'll just skip over what they are. While GPT commenced 2020 with solid momentum, the group's performance for the 6 months prior to 30th of June 2020 has been impacted by the measures implemented in response to the COVID-19 pandemic. Mobility restrictions, isolation measures, and requirements for some businesses to cease operations resulted in significant reduction in foot traffic and sales across the group's retail assets, and most office tenants implemented work-from-home arrangements in line with government recommendations. Most logistics tenants continue to operate their facilities as supply chain movements remained essential, particularly for food, pharmaceuticals, and general consumables. As part of the government response to the pandemic, a commercial tenancies code of conduct was developed and legislated in each state and territory, requiring landlords to provide rent relief to qualifying tenants impacted by the government-mandated measures. The Code of Conduct requires landlords to provide relief for a period of up to 6 months to qualifying tenants in the form of rent waivers and rent payment deferrals. The relief is to reflect a proportionate share of the revenue impact experienced by qualifying tenants as a result of the COVID-19. At the end of the reporting period, the negotiations to effect this relief were underway but remain incomplete. Okay, so they're still negotiating the impact of that, which is a little surprising to me. I thought they would have already had it done. Well, there we have it. The group has also agreed to provide relief to some tenants that are not eligible for assistance under the Code of Conduct, but have been materially impacted by COVID-19. In response to the high level of uncertainty and the unprecedented circumstances, the group has reduced or deferred spending on non-essential and discretionary items across the business. The Rouse Hill retail expansion and the Melbourne central office and retail development have been deferred until such time as the market conditions are more favourable. So we're going to start seeing that, or we're going to start seeing more and more of that, and its impacts on the construction sector, everyone. In addition, the 2020 short-term incentive compensation scheme and the 2020 to 2022 long-term incentive schemes were withdrawn. The health and safety of our people, our customers, and our communities has long been paramount throughout the period. Additional resources and funds have been deployed to ensure we maintain safe environments across our portfolio and within our premises. GPT delivered FFO of 244.5 million for the 6 months ending 30th of June 2020, a decrease of 17.5% on the prior comparable period. With the additional securities issued in 2019 as part of the equity raising, FFO per security decreased 23.3% to 12.5 So that's their funds from operation, everyone. GPT's statutory net loss after tax is 519.1 million, a decrease of 247.2% on the prior comparable period, predominantly due to negative property valuation movements of 711 million. Damn. June 2019, a positive reevaluation of 130.8 million. So it's offset by a lower negative mark to market of financial instruments of 51.5 million, driven by lower market swap interest rates. The group's rolling 12-month total return was negative 0.1%, down from a positive 11.5% as a result of the reduction in NTA per stapled security of 28 cents to $5.52 for the 6 months to June 30. And NTA, I'm assuming, is net tangible assets. There you go. See, I'm learning all the lingo, guys. I'm learning all the lingo. That's one thing when you go from one profession to another, the language changes, and that's about should build a glossary of this. The group's estimate of expected rent waivers and an estimate of losses for uncontrolled rent up to 30th of June is 86.6 million and has been expensed in FFO. Including in the results is government assistance from JobKeeper of 4.1 million and land tax relief of 0.3 million. During the period, the group also amended its distribution payout policy to align with free cash flow. Under the amended payout policy, GPT will target to distribute 95 to 105% of free cash flow, defined as operating cash flow less maintenance, less and leasing capex and inventory movements. GPD's previous policy was to distribute 95 to 105% of adjusted funds and operations, defined as FFO less maintenance and less capex. Distributions will now be declared at the date the directors sign the financial statements rather than prior to the balance date. So I think we can see here, what are we having a look at here? Change, retail, operations net income is down. Office is slightly up. Logistics is slightly up. What do we have here? Corporate management expenses are down. Income tax expenses are up. Non-FFO items, valuation, well, look at that. Down. And I will let you go through the rest of this report on your own time. Let's just see what else we see here. Director's report, value of the portfolio, overall portfolio is 14.4 billion, retail is 5.7, office 6, logistics 2.6, occupancy rate is at 98.1 of the overall portfolio, office is only at 94, down from 98.3. Weighted average lease expiry, WALE is at 4.9, retail is only at 3.8, down from 3.9, office is at 5.2, down from 5.3. Logistics is at 6.9, down from 7.3. So everything's down. Structured rent reviews, calendar year. So in retail, 75% of specialty tenants subject to an average increase of 4.7%. We'll see. 85% are subject to an increase of 3.9. 93% are subject to an increase of 3.1. So weighted average capitalization rate is at 5%, down from 5.04 in retail. 4.85 in office and 5.29 in logistics. And I'll let you go through the rest of this in greater detail on your own. But you can see here, everyone, a big real estate investment trust is taking a hit, and the fact that the impact this can have on all of us through the super funds is definitely something we all need to be aware of. Are you concerned? Have you invested in any of these real estate investment trusts, or are you waiting to see if they'll take an extra hit? Do you think the demand for office space will still be there, or are you hoping retail or logistics will keep it going through? As always, thanks for watching. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy a merch from HeiseSays, and you can Use Goldpaster on the Perth Mint and support us via PayPal. Take care, everyone. Have a great day, and I will see you all in the next episode. Bye from now.